What would we say has really defined the first half of 2025?
Well, it's lots of stuff, right? At this point of the year, we were supposed to have lower rates, right? It was supposed to happen. Didn't happen. Hasn't happened yet.
We've had a few other things going on in the world, I think.
Yes, it's just uncertainty. We've all expected rates to be lower, but news changes every single day. Nobody really knows what's going to happen. Now we're in that stage of something said on Monday is going to be taken back on Tuesday and it's going to be delayed on Thursday, right? So the market's kind of like, all right, whatever. We're not going to trade this anymore.
The first couple of months of the year, it felt very scary, very erratic. The news were high and low and everything in between. And our buyers and sellers were very reactionary to it. Obviously, as we went more and more into the year, people kind of said, well, I'm getting a little bit numb to this, right? Who knows what it's going to be, but I still need housing. So we did see things take off, but we've struggled with some of the things that have, God, I feel like a broken record saying it. Inventory, because it's still a major issue for us here. The other thing that I'm going to put out there is the media. The media is having their way with us, and they are not making it any easier because, truth be told, there are parts of the country that are struggling in their real estate markets. It's just not necessarily us. So I'm seeing a lot of really preconceived notions when people come to meet with me about what's actually going on in the market. Are you seeing that as well?
When we saw rapid appreciation, we kind of stayed stable here.
Sure.
It wasn't, we were way under the average. Same thing when the housing market crashed. We didn't crash as much as other places did. And I think that's what we're seeing now. Florida, for example, crazy inventory, right? Like you can find a house tomorrow and close, 4 days from now kind of thing. That just doesn't happen here. We don't have the inventory here in certain markets around the Chicagoland area. Yes, we do have a little bit more inventory, but it's still a struggle.
I think some of the reasons that sellers are finally deciding to sell, part of it is just time, right? They're expanding, they're growing, their life changes. It's one thing to kind of hustle your way through a year in a house that doesn't suit your need. But as that year becomes 2 years, 3 years, 4 years, all of a sudden you find that you're making some concessions and compromises that prioritize quality of life. The other thing that I think we saw a lot in this year, the different markets within our market started to perform a little bit differently. Our first-time buyer market in the spring has just been insane. It's been so competitive that I've found myself talking to a lot of those clients that don't have to buy in the first half of the year and advising them, hey, we can do this. But let me talk to you about a little bit of a different strategy that takes place in the second half of the year, because that market was incredibly insane. Single family homes under $1.1 million, $1.2 million, that too, once again, so competitive. I had a listing this year that had, I think, 24 offers on it at one point in time. And I tell you, there were 23 groups of people that absolutely despised me in that. It was not a fun thing to be a part of. I think we are getting people that are saying, even our sellers that are saying, hey, I don't even give a rat's ass, excuse my language, about that interest rate anymore. I want a new home, but then they can't find it.
And the first-time homebuyers too. I felt horrible for them because if the market was like that when I was buying my first home, you'd literally kind of go, well, I'm not going to do this now. You said you had 20-something. I think my record was I had buyers lose out, and they were 42. There were 42 offers.
Long story short or short story long, our market is continuing to move at a rapid pace. Yes, we are finding that people are buying and selling homes, but it's not easy. But we're navigating it, we're making it through, and luckily our clients are putting a lot of confidence in the strategies, the advice and counsel we put forth in it.
Yeah.
How do we think the inventory has evolved in 2025?
The inventory that's coming on, it's looking to sell right away. You get the sellers that are just like, all right, we have to do something, so let's price it at a point where we're going to get movement on it. The listings that might have been around a while, there's something wrong with it, right? Like 100%. Anything that's priced well that sellers want to sell, it goes. So the inventory doesn't last long.
When we're in a market like this where we know we are undersupplied, I always tell my clients, here is the range of what things are worth per the data. And that if you're ever going to make a mistake in terms of pricing or valuing, you want to make the mistake on the more aggressive side, because we know our ability to make it competitive is quite high. And that if you make it competitive, the market will determine where it goes versus the alternative. If you price too high, this market is not forgiving, right? It is so easy to overprice. It's next to impossible to underprice. How many pre-approvals do you feel like you're writing for buyers this year each buyer?
Way more than normal. The most I've ever written for someone is 21.
Holy smokes. That was not one of
No, it was
my
Austin, Texas, not Chicago, right? Like I always say, they're either the worst negotiators ever or the
Right?
most unlucky people.
Yeah.
We're writing multiple pre-approvals and they're at list or over list. Nobody's coming in trying to underbid something anymore. So I think, yes, we do write multiple pre-approvals, but that's where our expertise, as a team comes in.
First and foremost, all of the national news going on definitely has paused some of our sellers' plans, without a doubt. We have had sellers that have literally come to say, hey, I want to move. Oh, I'm not 1,000% in my job security, my industry, the state of the world, what's going to happen. There's too many loose cannons, or just one, that I don't feel comfortable moving. So we definitely have sellers. And right, when we talk about our sellers not moving, that's making our inventory stuck, right? We're not getting that stuff back. We're still having a major issue, in my opinion, in terms of the new construction. Our developers are not feeling good about building in Chicago, right? This is a real issue. On a government level, our political sense is not making it easy for them. The profit margin is not there. The interest rates are high. The labor shortages are there. The supply chain issues, all of this stuff is making it so our developers do not want to build. And if we don't get new construction, whether you're looking for new construction or you're not, that's the top of every market. And if those people don't have something to buy, they don't have something to sell, and vice versa, on and on and on and on. So the other thing that I'm seeing a ton of, we have clients that we have literally been working with since the beginning of COVID, 4 or 5 years now, that are looking for their very long-term house. Those are things that you don't compromise as much on, right? That they're in an okay situation, but they want to buy the next house that they're going to live in for the next 20 to 30 years, or at least think they're going to live in for 20, 30 years, because realistically, generationally, we don't live in homes that long. But those people are sitting and waiting, and they're holding on to their inventory as well because they're not finding the next thing. So we just have all of these clogged arteries when it comes to our inventory, which is really continuing to make it difficult, whether you're at the top of the market, the middle of the market, or the bottom of the market.
Yeah.
What's the story with pricing so far in 2025? Now, anytime I'm going to talk about pricing, I'm going to have my little asterisk over here, right? The asterisk is going to say valuation, pricing, growth, appreciation is local. It's street by street, block by block, area by area, building type by building type, and everything in between. Year to date so far, we are seeing, in general, the median pricing is up about 5% in Chicago. But that is such a small sector of the story. What we have found over almost every year that we've been in this type of market, and we have seen that the front half of our year is loaded, and the back half of the year tends to see things balance out.
Yep.
Would you agree with that?
Yeah, for sure.
Just last week, had a negotiation. It was a single family home in a prime location in North Center that was priced under $1 million, right? That is unheard of.
Yeah.
We don't have a lot of those options that check a lot of boxes and don't need a tremendous amount of work. It was a relatively turnkey house. That house, if we rewind back to spring market, the heat of spring market, that house would have had 10 to 15 offers on it and would have probably sold somewhere in a $1.5 million, $1.1 million, something like that. Now, fast forward to today, it sold with how many offers? I think there were 4 offers in total. Now, I can't disclose the information because the property isn't closed yet, but it stayed at a much more reasonable level. Now, the offers were competitive. There's still a lot of things that you're having to do to navigate it, but it's different. So if we have things selling for ultra premiums at one point, and then still selling at more conservative premiums, you see that the overall appreciation starts to balance out.
The prices are by no means obscene. They're not like what I see in other parts of the country that are
or
absolutely...
even the suburban markets.
Yes.
The suburban markets seem crazy to me.
Yes, and there are pockets that some, in the city,
Yes.
right, that people pay things and you're like, what? Like, that's never going to appraise.
You alluded to it earlier, is that Chicago has a mentality with real estate. Slow and steady wins the race. The little engine that could, right? Our peaks aren't as high, our valleys aren't as low, right? We just kind of chug along from that perspective. So the year that some of the country is seeing 30% appreciation, I think we capped out at, high 7s, which is huge for us, but it's also more sustainable for us. Now, the other thing that I think is interesting in the home prices is this is where we're talking about blanket statements. If we go into different sectors, I've also noticed it in price points. Like single family homes, somewhere million to a million two or three. That's another very highly competitive market. I've had clients that were in that market that found a way to financially push themselves to $1,400,000 or $1,500,000 because they felt like they were getting a fairly similar.
They're just getting a better deal.
They're getting a better deal because there's less people making that stretch.
Right.
So if they were trying to buy $1,100,000 house and having to pay $1,300,000, or if they're trying to buy $1,400,000 house and getting it for $1,400,000 or $1,450,000, that felt like they were getting enough more house for that value. And so
Yes.
that's where it's hard to talk about pricing on a blanket statement. Right? I think the most important thing to note is that the city still is performing well. Not outrageously, but it's performing well. But we also know what we've seen in the first half. Kind of think about it like the front nine. It's not going to sustain in the back nine. We're going to see that things level out a little bit more before we see our total numbers year over year.
Yeah, but as soon as rates come down, that totally changes. So,
We are sustaining, we are stable, and we are continuing to perform well.
which is what you want.
Present.